Right, this is now this is a bit sentimental for me, JD. Money of mine would not exist if it wasn't for this place. Precision Funds Management, the founding partners with Life of Mine.
Yeah, that's
now
right.
become Money of Mine.
Trav and I were real fanboys listening in.
We're honoured.
This is when we started going viral. Clates, Weary, welcome to the first one. Oh no, Clates, you've been on the blower at Money of Mine, but we're here.
Yes,
we're here in the flesh today, which is
fantastic.
Without the cameras, I didn't want to. I didn't even entertain asking. So maybe one day.
Weary's got a face for TV, but I certainly don't.
Right now, JD, you're a big fan of the macro environment, mate, and I've done nothing but give you the best economist in Western Australia to give you the macro rundown. Timothy Leonard Weir. Take it away, Weir. Show him what you got, Colin.
Well, we're and I'll be interested to hear Jonas's opinion, but we seem to be in very much a holding pattern at the moment. As from a market's perspective, you've got all the same issues that are overhanging. The economy and markets, and the latest one being the debt ceiling, which they seem to leave to the 11th hour, and then they increase it, which only makes the problems in the US worse. And the underlying factor that's going to, I suppose, indicate how hard the US economy hits is just general money supply. Now, if there's any hiccups in inflation and the Fed goes harder, it's only going to limit money supply. So that's a big negative for markets across the board. So everyone seems to, all the so-called experts I read at the moment, is that we are on tenterhooks a little bit at the moment. The resilience that we've seen in markets across the board has surprised a lot, to the point where if you've been out of the market, you've missed out on some significant gains. Now, we tend to be pretty shielded here in WA because we're so resources focused. So we tend not to take a wider look at the big picture, because the fact of the matter remains is that the outlook for commodities in general is pretty robust. However, that will all come to a crashing halt if the US does have a recession that hits pretty hard. And there's plenty out there that's saying that will be the case. And you go into this deflationary mode where you've got negative growth and rising prices, and that's really could increase the depth of a potential recession out there. So the gloomster in me would point towards that. At some stage in the very near future, and this has been said for quite some time, that the US is in for a period of duress, which will reflect on markets. And then the counter argument to that is that corporate America is still pretty robust, and as delivered in the quarter by quarter earnings reports, and that the impact of the recession will be fairly soft. And that the Fed may well do an about turn, that the rate rises they've put in place will lead inflation back into their target levels at the fullness of time. And indeed, you may have even experienced some rate cuts to counter the impact. So we're in that sort of holding pattern at the moment, Jonas, is my opinion. And please feel free to rebut in any way. If you think I'm full of
the proverbial.
Yes, thanks, Andrew.
It's interesting to look at the US market, and you look at how 2023 has played out so far and where the returns have come from, and so much is just dominated by big tech. They've driven so much of those returns within the sort of top 10 names on the index. It's really interesting to see. Do you guys have a sort of view on interest rates? Do you believe the central bankers when they say we're going to keep it pinned up here in the US over 5%, a bit less here in Australia? Or do you think they're going to have to buckle like the market's sort of pricing in?
If you look back historically, and it's not just the Fed, but all central banks, they always seem to overshoot in both directions. Both the last couple of rate rises tend to prove that they've gone too hard. and likewise on the flip side, they're too late in responding to increase rates. So I don't think this will be. I don't think this cycle will be any different. Because you've got too many uncertain events out there, and what usually happens is we do have some black swan event, like the banking sector, that comes out of left field and rocks markets' confidence. So, we've obviously seen that to a degree. It had a short-term impact, and then it righted itself. But ultimately, I think it looks like we're going to have a pause in rate rises in the next month in the US and in Australia. But I still think any hint of wages inflation starting to kick in, the Fed won't hesitate to kick in with another rate rise. But ultimately, I think they'll overshoot the mark and they'll be forced to wind back pretty smartly. When that is, I don't know. But short term, this debt ceiling issue is going to be one that it's only compounding their problems in the US, because they've got to look at the other side of the equation and really start looking at cutting costs to reduce that. And that seems like there's something that they're not prepared to confront.
Yep. And so we saw about a couple of years ago capital raisings for the juniors happening every other day or multiple a day. But now that you have, much more of an opportunity cost, how do you guys see the funding environment at the moment for the juniors and the mid caps?
Yeah, it's been. In the past month or so, we've seen a raft of what I call survival capital raises in the junior end, and you see raises of small as 500 grand,
paying the rent,
pretty much,
yeah.
And the wages firstly,
and pivoting of some of the junior companies that have gone down one track and probably
pivoted to lithium,
pivoting to lithium or the next,
so
niobium or rare earths or something.
Oh, we're getting into niobium. Exciting.
No, totally. It's and look, that list of junior companies raising money exploded in the last 3 or 4 weeks. It started to quieten down a bit this week, but they're all small pay the rent type transactions. So, but still a lot of money being pumped into the ground, but. If you read Rick Rule, he's quick to point out that a lot of the bulk of that money gets pumped into administration. Yeah. And he was pretty harsh with his comments on junior companies. He said there should be about a third of junior companies. And he said if you combined all the 2,000 junior companies into one, he said combined they'd lose US $2 billion a year. And
in a good year.
And in a bad year, they'd lose US $6 billion. So harsh but true.
Yeah, and it's and because everything's gone down so much, they can't raise bugger all anyway because the juniors' prices have gone down with everything, and they can.
That's right. The
get
dilutionary effect for current shareholders is pretty massive. But, I suppose in the bigger end, there hasn't really been that too many. Large ones really. Probably the last big one was the Genesis 450 sort of thing for Gwalia. But otherwise, I'm trying to think.
Chalice.
Really. Chalice is 75, a little top up sort of thing.
That's not a big raise for Chalice.
Drop in the water. Yeah. So often with these things, there's it can take an event whether it's like M&A or exciting drill results. So I think that sort of leads us into WA1.
Yeah.
It's pretty exciting.
Uncharted waters, the niobium.
Yes.
Does everyone know what niobium is used for?
Well, I do because I've been in a project called Panda Hill, which was in a company called Cradle Resources, which in specied it out. So I actually have known about niobium for some time, but it's
there's the one in Tanzania. Isn't it?
But it's now a critical mineral. So
because it's I guess it's. Doesn't go with the whole renewable thematic, does it? It's for high strength.
No, I think it
strength.
absolutely does.
Yeah,
it does. How does it phones, isn't it? Like for lithium batteries.
It can be an alloy in cars and the like, and reduce the weight overall.
Because it's a high strength steel.
Something like 300 grams of niobium can reduce the weight of a car by 200 kilos.
So WA1 were quick to promote that.
That's where it ties.
Happy to run with it.
Yeah. And interesting that 80% of it comes out of Brazil.
Well, it's one project in Brazil, like a private company that I was reading about it. I think they sold 15% or something in 2011 to the Chinese for 1.7 billion or something.
Wow.
I mean, this makes, like on rough numbers, they're talking about 100. Like the global market's about 120,000 tons, and I think this Brazilian family private company produces 100,000 tons. It's sort of sub US $10 a kilo. The current price is sort of $45 a kilo.
Pretty healthy margins.
So that makes, and it's vertically graded in the whole three, I think.
Yeah, three mines around the world. So I'm interested to hear your guys' thoughts when it comes to these, flavour of the month sort of commodities. Like my first thought is this would come online hypothetically and just tank the whole market. If it is a great project, the commodity price will come off. If it's a rich deposit, how do you guys sort of like weigh up looking at these commodities you've never heard of a couple of weeks before?
I think the first thing is to look at the overall market. I remember when Scandium had its run about probably 10 years ago, and you looked at the global market, it was about 5 tonnes or something. So it's like, that's never going to work. At least this one's got a size of, 120,000 tonnes. It's not enormous, but the incumbents, obviously, that the big gorilla is generating fantastic margins sort of thing. So what you need is to have a compelling project that can compete with that. And we looked at a little company called Niobium that's listed on TSX. It's capped at sort of 40 million, and they've done a full sort of study on their Niobium project, and that was, I think their average grade was about 0.5%. It was a big capital. It was sort of 400 to 500 million.
And these guys are about 5, aren't they? 5%?
Yeah, well, they're getting grades up to sort of 4 or 5% near surface, all that sort of thing. So you look at that and going, well, can this be a project? And prima facie, with all the caveats, it looks like it can be a project, if the market's willing. And they're not going to be able to go in there and suddenly be a 50,000 tonne per annum producer, but you can certainly see them maybe being a 15 to 20,000 tonne or something like that. With that, but there's some really, some stunning intersections that they've had, in a new discovery, and it's what makes the speculative market, get really excited because it's uncharted territory, and you saw that they're up there aggressively exploring it. The fact that one institution, Regal, plowed in $10 million, said, yep. We bypassed the brokers.
They took the whole thing,
They took the whole thing and said, we love this. And for the company, fantastic. A great supportive shareholder.
A few grumpy brokers out there.
I'm sure someone clipped the ticket.
Yeah. So
talk about a great holiday destination. Like it's not, you wouldn't say it's the arsehole of Australia. Jeez, it's getting close. Halfway between Marble Bar and Alice Springs.
Yeah.
So,
right on the border.
Right on the border.
There's probably only one worse place is probably the Rico Dick project on the corner of Pakistan and Iran.
Well, I told you the Brett Grocock.
You're going to the site, is it, Andy?
Well, Brett Grocock, the surveyor for his Mining Survey Plus, he did the Topo survey over there back in the day, like 10 years ago, driving around and smugglers like drive along the edge, and he had to drop the name Shane Warne to get himself out of shit pretty much because they love cricket over there. What do you think the valuations of these? So WA1, they're sitting at 120 million. You got Encounter there next door at like they got the neurology. So
the neurology play. They flew some a Falcon gravity survey that sort of lit up with some big anomalies. I mean, on the WA1 were drilling sort of within 20 metres of their border sort of thing, and the gravity looks like it potentially continues on there. But they've also got some very nice targets out to the east that have just lit up as sort of bullseye targets. So
and they're sitting at 90 million. Like, I guess how do you guys look at, like, you look at these graphs, like you look at WA1 and just that start of that mania in a way, I guess, from a fun perspective. How do you look at it?
It's difficult because we've really got nothing to compare it to. And in the case of Encounter, they've got a lot of other projects. They've got joint ventures with the likes of IGO, South 32, BHP, etc. So it's really hard to, and there's no resource on there for anyone to do a back of envelope just yet. So there's a lot of speculative money in there, obviously. Andy, just from what makes or breaks a lot of these projects, though, is obviously Capex and development. But MET is probably going to be the one that needs to be ticked post-resource or during.
Yeah, or during the drill results, I'm sure they'll do some preliminary MET testing sort of thing.
It's a carbonatite, isn't it? So it's not like a clay thing.
Yeah, no, it's not a clay-hosted thing.
Which needs shitloads of acid. I think carbonatite's a bit on the better end, aren't they?
So your view, it would be expensive to extract or, too hard to say?
Too hard to say. But I think the fact that it's near surface, it's high grade, it's got all those attributes that you like to see. And in if they can drill out a 1.5 to 2% type resource, I think, and throw some economics around that. Well, we did some very, very rough back of the envelope and comparing it to sort of what this Niobium, their sort of assumptions, and you could certainly make a case for if they got 100 million tonnes at 1%, then it's a potential project. But you forget the when you get to these new areas. I remember the Gawler Craton 15 years ago when it was that gold discovery in the Cowcrete sort of thing, and New Province sort of opened up. Ended up only being one mine, which was the Challenger mine that Dominion ended up doing. But you have the hype and the dollars that go into that ground. Similarly, I suppose with Julmar, the Nova discovery of IGO. So these are things that can really, and that's why I think people, you love the speculative shares, because you can take a serious resources from 5 cents to $5. And I suppose in more recent times you've had the Liontown example of backing good quality teams and discoveries, 2 cents to, $3.
Yeah. And yet to be determined.
Yet to be determined. Yes.
Yeah.
So
very much.
And what the back of the envelope, what was the scale looking like for the, Capex and the processing side? Is it going to be a big operation, or yet to be?
It'll be one of those classics. It'll be market determined sort of thing. So in terms of, I would envisage it being sort of, trying to keep a relatively, a doable capital. And look to to grow into the market sort of thing. You don't want to be like a Syrah, if you remember them. Had a fantastic resource. They came in and said we're going to be the world's largest graphite producer. And sort of shot themselves in the foot. In some ways, obviously the delivery was poor for a range of issues. But to go into an industrial mineral and say a 1 million tonne market and produce 300,000 tonnes, it's sort of counterintuitive to say, prices are still going to remain really high, sort of thing.
Yeah.
So look, it's clearly a long way to go.
It's got the attention.
It certainly has.
Absolutely.
And when you're saying that they're out there drilling now, so let's wait and see.
And when you're attracted the instos to solely get the raise, that's right. Makes everyone pay attention. Yeah.
Oh no,
totally,
absolutely.
We should see pretty soon with the sort of grid they've drilled out, assays pending. We'll find out pretty soon how it all hangs together.
That's right. So they've got a nice, they're sort of saying, I think, 400 metre strike sort of thing. And
it's actually pretty close to a road too. Like, it's right on that road between, which is, as I think Macca said to me, he's like, people need to start drilling a bit away from the roads. There's probably shit everywhere that people don't know about. Right, Lindian, LIN, another bit of a rare earth and bauxite play.
This is one we've sort of looked at a couple of times, and Alistair Stevens presented at the Euros Rottnest conference, and look, they are some of the best drill results I've ever seen. If you look at what they've drilled, plus 100 metre intervals at 3 to 4% TREO. This looks like a absolutely big resource, and I think they'll be coming out with their maiden resource in June this year. So in a month's time, but some unbelievable intersections if you're looking at them in the compared to a lot of the Australian stuff when when they're talking ppms. This is 3 to 4%, and there's a high grade core. At the moment, they're drilling a 900 metre or kilometre hole beneath the sort of the top. Currently, they've drilled sort of out the top 250, which will be where the resource is, and they're drilling this 900 metre hole to get sort of about an 800 metre vertical extent. But Stephen Clark at Euros actually covers it, and his sort of conceptual resource, based on some depths and widths assumption, is sort of up to 250 million tonnes at 2.4% TREO. So this is an absolute this is a monster, and the plan to what their way forward is to look at maybe just building a sort of a pilot plant scale plant for sort of not a whole lot of capital, and start producing actually rare earths and fine tune the flow sheet from there, and then expanding it. Like they're sort of talking, your minimal 350,000 tonnes a year, focusing on the higher grade portions, then and then increasing that to 1.5 and ultimately to 3 million tonnes, which on those numbers, you could see sort of that, I know in Stephen's numbers, he's talking about sort of a 75% recovery, but you could see up to sort of 10 to 12,000 tonnes of NdPr. And the key things is the ratio is good. It's like 20%, plus there's no uranium and thorium in it. It's very low on that. But it's a fascinating project, because this is one that I think 10 years ago or longer that Lynas was actually had a deal to do it, but they'd done, you speak to the company and there's been lots of machinations, lots of African-centric type deals where the government's given it to someone and Lynas has dealt with them, and somehow it's all ended up back, and Lindian have done the deal where they're buying it, outright for 30 million sort of thing. So
I've followed Sovereign in Malawi as well, on and off for a while. How do you look at Malawi as a jurisdiction?
I suppose the only, you've had the Lotus, their uranium project sort of thing. So I've never been there, but from all reports, it's probably one of the better jurisdictions in Africa. I mean, it's like you look at all those transparency index and the corruption indexes, things and all that. But I mean, the reality is at the moment you've got sort of West Africa, some real hotspots in Burkina and surrounding that, where a lot of insurgents are coming down, whereas sort of central to Southern Africa, there's always issues.
Yeah,
it's just.
I thought Tanzania was stable.
Tanzania. Tanzania for 25 years.
They're back open now, though.
Yeah, supposedly.
But for 25 years, Tanzania was, you classify one of the better African jurisdictions to go to.
Yeah, we spoke about then they wanted, was it $160 billion, I think, off Barrick for the tax bill?
Yeah, that's right. So, it's, I mean, I always say that, you don't go, if you're in Africa, you want to have a really good deposit. I think is the key. You don't go there for an average project, and this looks like it's a cracking deposit. So,
and it's so much with to analyse this. I don't know. I assume you are a lot more over it than I am, but like the processing side with these rare earths and the concentrate that comes out of it, like from what I've heard, like Mount Weld's the class deposit, but then you got Hastings coming on. It's lower grade, but their concentrate is a better quality.
Better grade.
So sounds like there's so many permutations.
There are
what
lots
the end
of
product is.
Yep, there's lots of permutations: hard rock, ionic clays, all those sorts of things, and. Hastings will be fascinating. Like it's it's big capex, and that's used to I just sort of shy away because they are these large capital projects. That juniors are trying to build with which is really probably the domain of the big boys. But the pricing sort of dictated it, that they could get it away and get funded, sort of thing. They got no funding, they got equity funding, so.
What's Lindian's timing on, resource pilot plan?
Yeah.
And what will that cost and how are they going to fund it?
Yeah, I think so. They're
end of this quarter for the mineral resource.
End of the resource for the quarter. Okay. And they're talking about getting into sort of a pilot plant by first half next year.
Okay, yep.
So pretty quick. Funding, typically they've raised equity. But interestingly enough, Simbo, who's the chairman, he's seems to have a very strong following of people that have followed him and made money in his previous things. So he hasn't actually gone to the institutional market per se. It hasn't been a Euros or something going out to raise 50 through that. He's been able to sort of really do it a lot off his own back because really the results sort of speak for themselves. And so funding for the pilot and all that, I mean, I think they've talked about it, potentially in discussions with offtake partners or something like, some pre-funding or something like that, or equity. Or
would these guys, being an Australian company in Malawi, would they be entitled to any sort of IRA incentives and stuff?
Yeah,
being like
I think they are exploring that. I wouldn't know, mate.
What's that, JD?
The Inflation Reduction Act.
Yeah.
So all the companies US aligned, non-Chinese aligned, and given 90% of the rare earths around the world either come from or processed in China.
Yeah.
They're trying to just set up incentives and stuff. So I think we saw Piedmont, we spoke about a couple of weeks ago.
Yeah.
And they got a 10% off their tax bill plus 140 million US to help them on their way with the capex of the project. So,
Do they have to be US domiciled or?
So that one's in North Carolina.
Yeah.
But yeah, the question is, will it? I think they haven't. Like companies are still testing it at the moment. If they build the project outside, will they still get the rights to these sorts of things?
Based on if they're listed there. And if they move the project out, but if they're still listed in America, is that?
Yeah, I mean, based on who the business partners and the like are.
Yeah.
But I would imagine, Lindian would have no shortage of sort of people wanting to,
partner up
at some stage with them, sort of thing. And then so it's really pilot, and then on sort of Stephen's numbers, looking at sort of stage 2, not till sort of 28. So like stage 1, they're looking at producing, it's a sort of 8,500 tons of concentrate sort of thing. He's got an all-in cost of about $4 a kilo. Rare earths average basket price about 12. So that will generate good money.
Yeah.
The larger one, 3 million tons. You're looking at sort of 55,000 tons of TRE and concentrate. So there's potentially some fantastic deposit. And I think sort of we'll be waiting on A, the resource, but B, the deep drilling, because that will show that, this carbonate still extends at, 800 metres vertically with mineralisation. So,
yeah.
Beautiful.
Right, let's swing over to the other side of Africa. We're going, we're in some interesting geographies today so far. Over to Guinea for Predictive Discovery, PDI. So they've been sort of travelling a bit sideways for a while now. So where are they all at, Clark?
They have. Well, we caught up. Andrew Party, the MD, was in town this week, so we had a coffee with him. Look, I think that's been a fabulous discovery. And so it did the classic. The market rated it very highly. They've come out with their resource, which I think is about 4.2 million ounces.
Yeah, 1.7 grams.
Yeah, 1.7 grams. Yeah. The interesting thing is they found this high grade sort of core that starts at about sort of 200 metres. This, prima facie, this will be a mine. Not the issue. What it is, it's also in what do they call it, an exclusion zone?
In the buffer zone.
But a buffer zone. So what they're required to do, or what they will do, will complete a scoping study towards the scoping study by the end of the year. Submit that to the government, because there's even though it's in a buffer zone, there is precedent in Guinea for being able to mine in the buffer zone, sort of thing. So that is what they're full steam ahead on at the moment. And they have been infill drilling, because for the scoping you need to upgrade your inferred into indicated to put out some reserves. So it'll be sort of scoping /PFS. Meanwhile, they are cranking on with their regional exploration. So they've got sort of about 35 k's of strike, and one of the targets, Argo, that looks pretty red hot in terms of the initial sort of gravity and aeromag, that similar signatures to what Northeast Bandcan is. So look. What I like, Andrew's had 10 years, lived in Guinea for 10 years. He's based there, flying in and out of Jersey along with his COO sort of thing. So there's always someone in country, they're doing everything properly. And ultimately, I think this belongs in probably a mid-tier /majors hands, because it's got the size and the life that could probably justify it's probably a 250,000 ounce type per annum type project. So
and plenty of potential upside.
Plenty of potential.
To the resource.
Like this is, this was it was a new discovery.
Yeah.
So you've gone 0 to 4.2 million ounces. There's clearly scope to go underground with that high grade core coming through. And I think if they find something else in that belt, then and then it's game on. But the reality is they need to sort out the permitting and demonstrate to the market that they can mine in the buffer zone sort of thing.
We've seen a bit of M&A in West Africa. Yep. We spoke with Andrew Grove from Chessa.
Yep.
Do you
Cashing
think,
out, playing golf.
Yeah.
Good on him.
is the permitting really the sign you reckon majors or mid caps will be looking at to become the catalyst?
I don't think anyone will move before they've got that permitting. It's just for a corporate, it's just too risky. Without that, you want Predictive and the team to de-risk that as much as possible, and then and then it'll be obviously how's the market, what growth do they need. There's precedents of some quite long life assets in Guinea as well. The Siguri and Anglo's in there, and the Russians are in there with Nord Gold sort of thing. Yeah. So but it looks it looks an absolutely cracking discovery. So
who'd be on the target for something like the African specialists between, I guess, like WAF, Perseus, Resolute? Would they be looking at something like this? Do you think?
Look, WAF's sort of got their own internal growth plans. So they're building Kiaka. Perseus is interesting, because they've got. They've pivoted down into Sudan, and Sudan's got a bit harder with that sort of with the unrest there. Do they then relook at that and look elsewhere? But I think so certainly that. But I think it's probably more offshore. Potential guys like your bigger guys. I mean, Endeavour are there. They're doing sort of 1.2 million ounces out of Africa. B2 Gold. There's there's quite a host of them, but I don't, as I said, I don't think anything's going to happen. I mean, until they sort this permitting issue. You've got BlackRock on the register with sort of, I think, 12 or 13% that are continued to buy on market. So, that's it's just going through that sort of quiet phase as they drill out that upgrade the resource and do some more regional stuff. But a fantastic discovery.
Well, the bigger, I think, did we read last week? There was even talks about, speaking of more M&A in the gold. I think it was Anglo-Ashani and Goldfields.
There was rumours. We were sort of staring. They just did that big JV in Ghana. That's right. Because they've got the two mines which sit next to each other. So that'll produce 900,000 ounces.
Yeah. Right. So you think it seems to be the flavour with and Newcrest, then they're like, we can do that.
They were all tying up their listing. They were pulling their Australian CDIs off and cleaning it up, getting off the South Australian.
That's right. Yeah.
So sometimes a sign. So while we're in Africa, Orecorp is another one we follow. Quite interesting.
Yeah, we've been on to
these guys.
Talking of Tanzania.
And look, this is, similarly, this has been, I think this is, a great discovery. It's been, had its issues when the Tanzanian government were there, but they decked a feasibility. And was it late last year, sort of thing? And there are a few projects of this size and scale, really. So you're looking at sort of an average production for the first 10 years, 240,000 ounces at all in cost $950 an ounce. So
is that US?
US, US. With a reserve, they got a reserve of sort of 2.6 million ounces. I mean, this thing's trading on an enterprise value. I think it's about 120 million, 130 million. People, and people are there going, how are they going to fund it and all that? But I think it's such a good project. If you look at the register, you've got sort of some of the best miners in the industry. People like Nick Giorgetta holding 12, 13%. Recently, Tim Goyder popped up as a substantial shareholder. So
he's probably trying to find something to do with his money.
Tim in his Chalice days was in Eritrea with that project. So he knows Africa well. He actually used to, I think, have this project in Sub-Sahara before it was ventured out. But that is a quality project. And if you look at it, they ticked a feasibility. They used $1,750 gold. They came with an NPV, 618 million. You bump that up to 2,000, the NPV goes up to sort of 900 million sort of thing. So, the capital hurdle is one, but I think there's lots of ways to skin this cat. And, similarly, it's in that basket where if you're looking to grow, I think it has to be on the radar. If not, it's certainly back the team to.
It sort of begs the question, though, Andy, why one of the majors or mid cap guys hasn't had a go at this. Is it the political risk that's still overhanging Tanzania?
I think Tanzania is probably not. If you're not already in Africa, you're probably not going to go there
for sure.
The people that are in Africa, understand the benefits and all that sort of thing. It is interesting, but I think Matt's certainly been out there promoting that, they've in advanced discussions with debt finance, to debt finance this thing, and they think it can support, a significant debt capacity, along with some potentially streaming deals. There's lots of those where you get upfront funding.
We went over that with the Metals Acquisition Corp SPAC the other day. The streaming.
Streaming.
Yeah, there's some streaming in there. Yeah.
Yes. But, to fund these projects, and I remember years ago, Teranga did it with when they bought their next door neighbour in Oromin, and the only way to fund it, that was Franco-Nevada with a royalty, and that's why they say with the streaming deal, they gave them 150 million, I think, for 9,000 ounces a year, into perpetuity sort of thing. So, but if they hadn't given it, the equity markets weren't sponsoring them. So, it works both ways. But look, that's one that we still really like. I think it's. As a general comment, I just think African gold is incredibly undervalued at the moment. We. Not just things like Orecorp, but even operations like WAF. It's trading at the same price it was when gold was, when it only had a single mine, it was just starting off, sort of thing. Even companies with big resources like an Orecorp, Predictive it's got a bit better market capitalisation because it's probably a newer sort of style deposit. But we caught up with another company, Tabani. And they've got 3 million ounces that in Mali. They're capped at about $20 million, and Phil's actually in our office, but he's sort of, we've got a plan of how we can. It's been Canadian listed for a while, so for a long time they've just demerged. So as a general rule, I think there's huge opportunity in Africa for project, for good projects that are not being rewarded by the market.
So,
at the moment.
I had a bit of a long-winded question. Emerald, obviously not in Africa, but you look at them, and then I'd looked at WAF, and WAF's traded in a sort of range of $1 to $1.50 over the past 3 years since they got that first project up and running. And in the context of Emerald, they've now got the first mine up and running. Do you sort of look at them and think like this is the level they're going to trade at until they've got another growth project? Or do you think that's just the nature of the market at the moment and these things will get more fully valued? Like there's the ongoing question with these mid-cap gold companies, they always have to be showing growth.
Yeah, well, Emerald does have some growth with the Bullseye.
Yeah, they own 60%.
Which they own 60%. I would, you would think over time they'll get to 100%, or close to that over time on that, because the minorities are not natural holders of that, and suddenly that gives them the growth from they're hoping to deck an updated resource / maiden reserve mid-year or Q3, and similarly to the Capricorn model, it's just like we'll let the results do the speak. Results do the talking. What they achieved to build OCVAL was nothing short of incredible during COVID. You had Mick Evans up there, who built it for, he lived up there for sort of 15 months. So the dedicated team. So if you're looking in prima facie, you might say, they're getting expensive, but I think when they can show what Bullseye can be, which I think potentially 150,000 ounces at pretty good cost. You're probably looking at low one. Might be $1,200, $1,300 Aussie. Capital costs will be significantly lower than probably anyone else. Recent builds can do, barring Karlawinda. So yeah, it is. And at the moment, you've had BlackRock's. They've got a very, very strong shareholder base. So you don't have any of these. You haven't yet seen the Van Eck sort of factor with those gold ETFs coming. So in answer to your question, Emerald's had a terrific run. I think Morgan's done it, and the team's done an outstanding job. I think they can certainly continue on to do it. I think, valuation-wise, it's probably getting up there for what they've got, but I think the market's now looking forward to that growth. WAF, I think it's, just people, the Burkina situation is certainly hurting him. Yeah. And it's like, what can he do? I think, and it's probably just them, continue to generate fantastic cash, which he's been doing.
Is there a bit of a Kiaka overhang at the moment while they have to develop the asset?
Yeah, look, there is, and there's probably a funding. The market thinks the market expects him to raise equity,
yeah.
whereas he's pretty adamant that at these prices he's not going to be raising equity and that he'll be able to get, a big debt.
Cash and debt.
Yeah, cash and debt to fund it sort of thing. And the reality is, you won't need, he's building it while he's still got, still got cash flow coming out of San Bredo. So, look, I think if WAF was in Australia, it would probably be 3 times the current market cap.
They should just sell the assets and buy one over here. They'll be 3 times straight away. Well,
it's just finding something.
Yeah, it's probably, So look, I'm sure the team's frustrated, but they've, similarly to Emerald, they've done a fantastic job.
They just keep doing the job.
Yeah, just keep doing the job. And ultimately the proof will be in the pudding, when they spit out in 25 as a 400,000 ounce producer. I think, when the team went to build this thing, there was a lot of, first time builder, how are they going to do it? Like, there's no track record. And he certainly proved them wrong by being able to deliver that and, repay that 200 million that Taurus had lent them within sort of 18 months.
Yeah,
so,
pretty impressive.
Yeah, incredibly impressive. So I think, you will see, I'm not sure if I answered your question. Probably not.
No, that's all good.
We're all better for it.
Yeah, that's right.
So on our sort of trip around the world and ASX mining companies, Centaurus Brazil.
Yep.
This one you guys follow a bit as well?
We follow it. We own it. We've followed it for a long while. Or we've owned it for a long while. Really like it. It's just softened a bit recently, but in terms of global nickel projects of scale and size, I think it's very hard to beat.
What do you guys think of them going all the way downstream to the nickel sulfate production as opposed to just leaving it at a concentrate?
Oh, look, it's that classic value adding, the risk reward of doing that. And certainly Down and the team think that if they just produce a concentrate, they'll be leaving a hell of a lot of value on that sort of thing. So we're certainly happy to back them, and they've got the offtake with Vale. So there's potential synergies there that they can do their sort of thing. But to me, it's a good project. They continue to find more. There's not many projects globally that have that 1 million tons of contained nickel.
Well, they're pretty much going to be just behind BHP is one of the biggest, like BHP
in terms of resources.
Because they got the I think they've got the deposit there to back up a downstream facility.
That's right.
Like, it's that.
Well, it's got the size and the scale. So and you've seen the corporate activity, obviously, with the June, Mincors and Western Areas and Naront and those sorts of things. So quality nickel projects are still well and truly in demand, and this, to my mind, this really fits the bill.
Absolutely. We listened to the Mike Henry talk he did at the Bank of America with all the majors.
Riveting stuff.
And it was I haven't listened to a BHP speech ever, I don't think, but it was really interesting to hear him talk there. They've stayed out of lithium. They don't think that's right for them, but copper, nickel is where they really want to play.
They've got the choke on nickel. They've got the top 4 producing mines, I think.
So that's their future-facing products where they're going to play, and then they've got the potash and the bulks as well. Yeah. But it was interesting to hear how adamant he was on it.
The irony is they wanted to sell that Nickel West business.
Just 3 years ago.
Yes. And suddenly it's the jewel in the crown. Or not quite the jewel. I think they're
So what's holding up Centaurus at the moment? They come off 30 or 40%. Is that just them needing to raise and a few other things at the moment, or is it just the market overall?
My view is just the market. I think they've still got enough cash to sort of get them through to the DFS, which they're targeting sort of by year end. Just the market's been a bit soggy. I think there was a bit of stock the other day that came out because Sprott sort of reorganised their business. There was a management buyout on the Sprott Capital Partners sort of thing. But it looks looks cheap.
What about, did you get an invite to the Delta Lithium rebrand?
Mate, we did get an invite, and unfortunately, we couldn't attend. But
they must have put a .au on the end of our email or something. Ours just didn't come through.
Yes.
How's the I guess the rebrand sort of fits with their strategy trying to get into that just get lithium in the name or
the name. Yeah. Well, red dirt, it's sort of probably more
goes against the grain,
more iron ore connotations or something like that. So but look, they continue to deliver. They're aggressively exploring both their projects and had some more nice hits up at Unithera the other day. on those pegmatites, and you also saw that voltaic. That,
I was just saying, another neurology
place. So they came out.
Took them about 24 hours to go into a halt.
Go into a halt, as you do, and raise $7 million, and we actually caught up with him the other day. Like, the MD's really, very impressive. He's got
I met him, but it was funny. I met him at a little network. I call these boys business development, which are the West Perth piss ups. I met him there, and then next week they've hit this pegmatite. So,
No, but he's got a lot of lithium experience. It was a data tech sort of thing, and on the metallurgy and things like that. So no, it's good, and it all helps on these juniors. So that area certainly is going to get a hell of a lot more attention, and red thing. And it's hard when you've got so many targets to probably narrow down and say, which ones are the better ones, and where to, the allocation of capital as you're drilling these things.
How's Flano going, trying to rapidly progress Mount Ida towards that DSO?
I think he's going pretty well. I mean, if you look at his last presentation, he talks about the debirth at Geraldton.
The Port of Geraldton,
Port of Geraldton. So that's certainly... where he's looking at taking out the DSO material and all that sort of thing. He's still, they had a very nice hit beneath the main resource at Sister Sam, I think it was, the other day. Deep, but good widths, all that sort of thing, showing that it's continuous. So he is, hell bent on getting a mining license by Q4 and ripping into it.
Is that still the main bottleneck there is the mining license, or?
Oh, it's a process, mining license. But then you've got the studies and what's the capital cost, how they're going to fund it, those sorts of things. They did the right thing and raised a big chunk of money when the market was good at 50 cents. It's given them sort of 50 odd million in the kitty at the moment, but they are spending it aggressively.
They've got 90,000 metres underway at Yinnathara and 60,000 at Mount Ida there. They're not waiting up.
Not waiting up. And it's one of the biggest drill program for a relatively, $300 million market cap company. So
when's that study? All the studies coming out for that later this year?
Q3, Q4 sort of thing. I mean, you've got diggers coming up. You'd imagine that maybe, try and target that for some sort of whether it's scoping style or just give a bit more flavour of what the DSO could hold and then could yield, and then the longer term, what sort of rate would concentrator and flotation support.
Very time critical, isn't it? Getting that DSO.
It is, yeah. I mean, you've said the price is sort of, or the lithium carbonate price bounced back a bit, but while these prices are good, why wouldn't you take advantage of it and help? Because the reality for a red, they've got to mine it anyway. They've got to put in a box cut or an open pit or anything like that. So, they've got to spend that in. You're spending that capital regardless. And if you can make some money on the DSO, why wouldn't you?
Exactly.
I think we'd be remiss to not ask about Genesis as well. We follow the story quite closely. You guys are on the register at Genesis.
Yep.
How do you sort of seeing it play out from here?
I think we really like both Silver Lake and Genesis. We actually when Silver Lake got belted, we did buy some Silver Lake. We thought that was an opportunity that because these are they've been over the journey, quality miners under Luke Tonkin and Len and the team sort of thing, and I think it's a bit of a different model because they don't like promoting. I
don't think he's done a presentation or anything for 10 years or something. Someone said, or an interview,
but they are very, very good at what they do. These aren't sort of tier one assets or anything, but they make very, very good money out of them. And I think the deflector deposit or deflector acquisition was great. So I think, you will start seeing that cash flow coming back in. They sort of invested capital quite heavily in the capital in the first 6 months. They generated sort of 20 million in cash. They've maintained their guidance for next year. And so we really like Silver Lake. And the Genesis team, obviously, we've been big backers of Rally over the journey through Saracen and all that sort of thing. I want to
good for the fund.
not the fund in Saracen, but when I was at Euros with Saracen early days. So I think so when we're postulating what might happen, we thought, okay, if Genesis increased a bid slightly, do away with that contingent part of the deal then, and with the discount closing, I think you sort of, you had Silver Lake getting belted down to sort of $1.01, Genesis at 125. The premium wasn't enough, sort of thing. So I think I'm not sure what more Silver Lake can do unless I don't think they're going to go and do an unconditional bid or anything like that. I mean, they would want to do due diligence, and I think they've been pretty disciplined in how they've gone about M&A over the journey. If you look at what they've done when they bought Deflector, or Duro. Hart, they didn't overpay for that. That probably hasn't worked out as well as I hope, but there's still a huge amount of potential there, and they get the right people in and drill it. It's washing its face, sort of thing, at the moment. So, I think my view is that Genesis will deck the notice of meeting in the next couple of weeks, which is what, according to their timetable. They've alleviated some of those conditions in terms of the 25 million deposit for St Barbara, and revisiting those plans. I think the market was sort of going, oh well, how can Silver Lake pay for this? And it's like, well, or why are they? I think what it does show is there's a lack of good quality Australian assets out there that are potentially for sale. Like there's probably some projects
they're fighting over one of the most difficult ones.
Yeah, but I suppose that they are underground specialists, narrow vein, and so I think they obviously see an opportunity where they could make big synergies, rip out costs, do all those sorts of things. And we never saw their sort of side of the argument, but I suppose that it's also third party verification that Gwalia, despite all the troubles that St Barbara has had, is an asset that you've had two of the best miners in the business wanting to own,
fight for it.
So I think
yeah, and I think as you said, there's not much they can do. They would nearly have to put a binding offer in because the RALs put the timeline on if it has to be shareholder approved before June 30. Otherwise, those performance rights won't be converted into Genesis shares.
That's right.
Yeah, it seems the only way that St Barbara would entertain anything would be without due diligence.
Well, that's right. It would always be an unconditional offer or something like that. And my view is I don't see that happening. I think the most surprising aspect in all this is that the ASX didn't deem it relevant material to not put, so they put it in their media section. I mean, I don't think I've ever seen that.
No, our video link got put in there as well because we were the ones covering it because we were taking the place of the ASX.
It's quite extraordinary.
Well, I think what I heard was the first one didn't go up because the offer had been knocked back. So that they deemed it not material because it had been, which is like a bit, it's still a material.
It's still
the fact
material.
That they put an offer in. And then I think the second one was a bit aggressive in the language in parts, which is why that one didn't go up.
Right. But clearly it was material because both share prices move reasonably.
Exactly. Yeah, no, it's been
10 or 15%.
As I said, it's been a good time to start a bloody mining news podcast with all that shit happening. It's good for us. Right, Clates.
No,
mate,
that's right.
Thank you very much for
that's
all that.
That's all right, mate.
Cheers, Clates.
No worries.
You didn't have anything else, did you, JD?
No, I think
you probably got shitloads of it.
I think we've taken enough of their time.
No, all good.
Thanks very much.
All right, boys, good on you.
Thanks, guys.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.